All right, here we go. So yesterday, the S&P rallied and closed above 5,000 again after having a really bad day on, when was it, Tuesday? Anyhow, today the retail sales data report was released. Another red flag report. So how are stocks reacting and how also does this affect our positions? And welcome with that to Coffee with Marcus and Mark. Today is Thursday, February 15th, the day after Valentine's. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And well, Mark, let's hop over to the S&P 500. And first of all, boy, were we wrong yesterday.
Yeah, love was in the air yesterday. The love was there in the S&P 500. Stocks finished near session highs. The S&P closed above 5,000, so a nice little comeback after Tuesday's dip.
Yeah, and I mean, yesterday we closed higher, we're pulling back, and we said, well, we expect a pullback, and we expect the S&P to maybe close 0.1 to 12.2% higher. And we said, today is not the day where the S&P is cracking 5,000, and we were wrong.
It
That's
did
what
it.
the market likes to
Yeah.
do. Prove you wrong. Rally into the afternoon for no reason at all, attacking the 5,000 level and trading. Actually, just a smidgen above this, above 5,000.
Yeah. And so after chopping around, just rally into the close, and then a little more follow through this morning. Although we've gone flat, and we're sideways right now for the session.
Yeah, so this morning, super interesting. If you're looking at the E-mini S&P futures in overnight trading, there wasn't a whole lot going on. It was rather flat. At first, we dipped a little bit, then moving higher, but you see, we pointed to a flat opening. But then we see right here, we have the seismograph going off, basically up and down and up and down. And this was caused by some reports that have been released this morning.
Yes, this morning it was all about retail sales data, and a bit of a shock, a bit of a surprise there. So we see core retail sales down 0.6%, and the forecast was an increase of 0.2%. Retail sales itself down 0.8%. There, the forecast, it was expecting a small decline of minus 0.2%. But that was a bit of a shock to traders.
It was. I mean, for me, it's not too surprising. But yeah, I said a shock. We talked about it this morning with our mastermind members. I mean, Powell said in the very beginning when the Fed started raising interest rates that at some point there will be some pain. And we haven't felt that pain yet. I mean, market making new all-time highs ever. This is where Powell kind of said, okay, kind of, I think I was wrong. But higher interest rates, we heard already a few weeks ago, we talked about it. Credit card delinquencies are up 50%. And it seems that everybody was still shopping like crazy for Christmas, for the holidays, because in the previous month, in December, retail sales and core retail sales were both up 0.4%. So, I mean, I kind of understand that right now consumers are looking at their credit card statements and saying in January, you know what, let's just pay off this credit card debt first before we take on new debt.
And that's it with the retail situation, inflation sticking around a little bit longer based on CPI data that we see. We have PPI tomorrow. I think investors kind of, what do we do with this information? Is it a bad thing? Is it what the Fed wants? Is that okay? But so far, markets higher, going sideways as traders try to figure out what comes next.
Yeah. And then we also had unemployment claims. I mean, that's also something that traders like to keep an eye on. No real surprises there. Came in a little bit lower than expected, still showing a super resilient job market. Although, I mean, we hear from more and more companies that they're laying off. I mean, we heard from Snap, we heard from UPS. I think it was Cisco announcing that they're also laying off, right?
Yeah, so that seems to be a theme, even though we had a really strong jobs report that came out the first Friday of the month. the layoff trend seems to be picking up.
Yeah. Talking about Cisco, I mean, Cisco reporting earnings, and Cisco, I mean, earlier they were massively down. Look at this. They are bouncing back. Looking at a 5 minute
Okay.
chart, they opened much lower, but right now still down 1.5%. I think earlier they were down as much as 3 or 4%.
Yeah, they were taking a bit of a hit. I think pre-market they were down over 4%. So a nice comeback, nice recovery, better than expected earnings and revenue, but the issue was guidance. So they said that they reported weaker than expected guidance for the fiscal third quarter and announced a downsizing plan that would result in a 5% job cut.
You see, it surprises me a little bit because if we look at Cisco and we're going to a weekly chart, we see that Cisco has just been diddling along for the last 3 years, since 2021, just hovering around the $50 mark. Now, I would think that Cisco would somewhat benefit from all the AI craziness. I mean, chip makers are benefiting from this, cloud computing is benefiting from this. Why not Cisco? Baffles me. I mean, is this really something where they're missing the train? And it's super surprising because if we look at stocks like Nvidia, right? Or last week we had ARM. Look at this Nvidia just shooting up like crazy. ARM. And again, I know they're chip makers and that's not what Cisco is, but you would think that they somehow benefit from the chip making, computing, cloud computing business somehow, but obviously they don't.
You're right. You know, without doing a deep dive, I absolutely agree. You think that with tech benefiting, that they'd fall in that category and do well. I mean, even for the earnings this quarter, 82% of the S&P 500 has reported, and according to I think it was FactSet, uh, 71% beat earnings and tech totally outperformed, right?
Yeah.
So that's been the case since 2022, and it seems like Cisco just hasn't had much traction.
Talking about tech, another one, Twilio. Well, you would think that Twilio would benefit from this somehow, right? I mean, tech stocks up, also looking at a weekly chart here. Twilio dropped from 400 to around, what, $60, hovering around $60. And the most recent earnings report didn't really help, although they had a surprise earning here.
Yeah, and you look at that. There's some green with a beat, but again, it's all about guidance. So they reported lower than expected guidance for the current quarter. Investors not liking that, and it looks like Twilio is on track for its biggest drop since November of 2022.
Wow, that's crazy. Now, on the other hand, we have Shake Shack, and let's see where they are right now. I mean, still up and away. Shake Shack here, up 19% today. I mean, they had really, really good earnings that they reported.
Not too shabby. And Marcus, is this the best burger? Can it beat McDonald's burger?
No, I mean, if McDonald's calls it the best burger, I think that's what it's called on the menu. It has to be the best burger, right? So I don't know. I haven't been into McDonald's, Burger King, Wendy's, or anything like this, Shake Shack, in a while. The only thing that I go to every now and then is because the kids love it is Chick-fil-A. So, yep, like Chick-fil-A here. Can't complain. Okay. Last one, and then we take a look at our positions, but we also have Tripadvisor rallying higher, pulling back a little bit. But over the last few days, I mean, Tripadvisor jumped from 22 to 26. That is here a very solid. I mean, if you just look from this, that is a 100%, almost 92%. But even if you look at this recently over the last few weeks, I mean, we're talking about a 40% jump here for TripAdvisor.
Yeah, nice move there after an earnings beat, looking pretty good. And hey, people liking Trip. I'm kind of surprised. Like, okay, I have not paid attention to Trip for a long time, so I'm not an expert on Trip, but it seems like it's kind of in the Groupon. phase where early on a lot of excitement, people loved it, and then it just kind of lost its edge or interest. But I don't know. I This one's interesting.
You know
Interesting
what,
move
this
there.
where I think that TripAdvisor actually has quite a few brands under them. It's no longer Trip, but I was just checking here really quick if they have anything that is very well known, but it's not. I thought that they might have something similar like hotels.com or booking.com
Okay.
under them, but that's not what it says here. So I might be completely wrong, but that's what I thought. So I agree. A TripAdvisor like Groupon, probably not the same, especially since we have Yelp and Google reviews, right? But um,
Hmm.
anyhow, yep. Surprise, surprise. This is what we always say. Let me just bring it up here and I have it on my mug, right? Trade what you see, not what you think. And what we see here is that Trip up, up, and away.
I'm all about creating healthy income portfolios.
There you go.
Chip, not trip, chip. Oh, sorry, buddy.
All right. Okay. Let's talk about our positions. And we have wheel positions and we have WTF positions. Let's start with the wheel. And there's our CSIQ. And we just talked about it as we were getting ready for the show. We thought that today was the day because trading up to 24. Nice follow through from yesterday. A little bit of a pullback right now, still up for the day. This trend line is still intact. And we have said we are looking at a wedge here and at a triangle formation. And I really thought that this today would be the breakout. Seems that we might have to wait another day for it.
It looks like it. We're up about 3%, and just now going negative for the day.
Yeah. Come on, little buddy. Do it. Just break out to the top side here. Now, on the other hand, GDXJ, I mean, wow, what a trade. I mean, just a quick story. You traded this, got assigned at 33. You sold calls on Monday, and then you were able to, on this drop, buy it back.
Yeah, for me and my plan, I will buy back a call at 80% max profit a put as well if I can do that in a 1 day situation. So I think I collected 47 cents on the call, and then I was able to close it for 9 cents on Tuesday with that big drop. Yesterday came back a little bit, and then today sold calls again.
Sold another call. I mean, all within a week. So double dipping here. And when trading, double dipping is a good thing. So collecting a lot of premium here. This looks good. Now, I was in positions when you established the trade. So I sold the 33 and we talked about it yesterday. I wouldn't mind getting assigned and then joining you in selling calls. But this year, behaving beautifully, nicely, loving this one.
Yeah, I like GDXJ. A little bit all over the place last couple of days, but working out great so far.
Yeah. MRO, I mean, this is just, oh, I thought because earlier today we were hovering so nicely around my assigned price at 22.50. So I got assigned, I sold calls at 22.50 collected premium. I sold calls at 23.50 collecting premium. And over the last few days, it looked like maybe it stays below that I do not get called away and that I can make more premium on this. Right now, wow, what a rally, up 2.66% for the day. So this is where right now we're even getting close to 23.50. I mean, talked about it earlier, a little bit too early to call it to get called away because we might see a reversal very similar to this one. But right now, I'm hoping that we close below 22.50 that I can sell more calls next week.
We've seen the early announcement a day or two before Friday sometimes comes back to not haunt us, but be incorrect. So we know there's a lot of trading left before expiration.
Yeah, we just talked about it. The markets like to prove us wrong. So this is why, right? I mean, maybe when I talk about this, the markets will prove you wrong. Let's see. So NEE, Next Era Energy, also this morning, nicely up, a little bit reversing here, still up 1.1%. But earlier, I think we were up as much as 2.5%. So pulling back a little bit, nothing for us to do right here.
Yeah, and quite honestly, the same thing. So we've talked about the yield situation and impact here, and that's exactly what we see. The 10-year yield was down 1.7%. Now it's down just a quarter of a percent, and that's exactly what we saw with CSIQ and NEE when those yields were down. Those two stocks were up nicely. Now that we're coming off of lows with the 10-year yield, the stocks are also dipping a little bit.
Yeah. And finally, UPS, our little buddy here, a little bit unchanged right now, kind of in line with the overall market. Because if you look at the S&P today, not a whole lot going on. We're pretty much flat. We are up right now 3 points, and on a 5,000 point index, that's 0.06%. So here, UPS still up 0.85%, outperforming the broad market today. We'll see. So here we need to start filling the gap. Right now, the 148 seems to act a little bit as resistance. So let's break through this and then go back up there.
Yeah, going next dividend tomorrow. So we will be entitled to a $1.63 dividend that's payable on March 8th. So looking forward to that. The stock's expected to drop by that dividend amount. And then let's see it rally.
Yeah. So this will be good. All right, hopping over to our WTF trades. And they're also a little bit all over the place. So let's start with MDT Medtronic. We entered this one yesterday. So yesterday
Yes.
we bought MDT Medtronic for 83.67. Right now trading at 84.60, almost up a dollar. I'll take this. I like this.
Yeah, could have an exit at the end of the day for tomorrow's open. We'll have to see, but so far so good.
All right. Then we have Verizon. Verizon also moving higher today. Loving my Verizon here. We bought it at 39.90. Right now up at 40.54. So looks like another winning trade here. And let's see if we get an exit tomorrow.
Working out great, and I would expect an exit unless there's a big reversal out of the blue today.
Yeah. And then we did have an exit today. Team that we entered at 214.11, had an exit here this morning, selling at the market open. And the question is, because team was a little bit all over the place, so we entered team right here. And so the question was, after being up to 222 and then pulling back to 203, 202, were we able to close this one out profitably?
And the answer, yes, it was a win.
Yes, another
Small
win
win, but
here.
it works.
So this worked out great. This morning we exited. What was our exit price again? 215.
215.90.
215.90. So entered at 214.11, exited at 215.90 for another nice win. I'll take this one.
Yeah.
Good. No other WTF trades on the horizon here for us. So, I mean, overall, it's going quite well. I'm very happy with it. I mean, this week has been a very interesting week. I mean, for some traders, it has been a super tough week. Let's actually go to a 5-minute chart so that we see what happened here this week. So today, we're looking at Thursday, so Wednesday, Tuesday, Monday. Monday, kind of a diddling day, not much going on, decisively above 5,000. Then on Tuesday, this massive sell off on higher than expected CPI data. Quick bounce back in the afternoon. Diddling along yesterday, finishing higher, and today lower. So, I mean, overall, it looks like we will have a losing week unless we rally again. And I think last week we closed somewhere around 50.20. So what do you think? Right now, being at 5,003, will the markets be able to eke out a gain for the week?
Yes.
Yes. Okay.
Yeah.
Because this would be another winning week. And this means that since November, we would have just have one losing week. Really? I'm saying no. What is it? Cookie bet?
Cookie, definitely a cookie bet.
Cookie
I
bet.
So here's my take. Here's my take. I think that CPI data was the shocker. I don't think PPI data tomorrow will be a shocker, and it will just be a reason to drift. Not really have this big enthusiastic rally, but a drift. So I think we could finish positive.
All right. Well, tomorrow, the all important PPI data, and then you'll see who is right. So tune in tomorrow. If you enjoyed today's show, we appreciate your likes. Hit the like button right now. If you think that this is funny enough, or probably not funny, but entertaining enough and maybe informative enough to share with others, please do. There's a share button right underneath the video. Share it on Facebook, on Twitter, by email, by text, however you want to share it. And then we're excited to see you again tomorrow.
Till then, happy trading, everybody.